Hello, everyone, and good morning or good evening, depending on where you are connecting today. And thank you so much for joining our webinar, Monetizing BESS with as-a-Service Models and Revenue Stacking Strategies. My name is Cristina Galan, and I am from the ATA Insights team, and I will be the moderator. Before we start with getting to know our panelist of the day, just a couple of housekeeping rules which we will be keeping in order the session. First of all, this webinar will be recorded and it will be sent to you by email in a couple of days, maybe probably next week, alongside the materials approved by the speakers. If you are connecting from Zoom, you have a chat that I see that some people are saying hi and introducing themselves. We highly encourage you to tell us who you are, where you're coming from, and why you're interested in this webinar. If you have any questions during the presentations, you can ask them at any time, but please ask them in the Q&A box so we do not miss them. This session is composed of four interventions by our speakers, and then we will move to Q&A. However, you can post your questions at any time in that Q&A box, which we will later move on after the last presentation. If you are connecting on YouTube, you also have a chat there. Feel free to let us know your ideas if you have any, and also your questions. So just to end up the housekeeping rules, this is one of our webinars for our RedMat event Almacenamiento that will take place in Seville the 17th and 18th of March. We're going to cover different topics such as this one. If you're interested in knowing more, I have my colleague Ian in the back, so feel free to ask them. So without further ado, we're going to make a brief introduction of each of our panelists of today. So I'm going to start by order of appearance. So I'm going to say good morning to Ruben Valiente. Hi, Ruben.
Hello, Cristina. Thank you very much. Good morning, everyone. My name is Ruben Valiente. I am the Managing Director of Maxxen. Maxxen is a European energy storage and power stations manufacturer. We have offices across Europe, Amsterdam, Zurich, Madrid, London, Istanbul, and we have our production facilities in our own factory in Turkey.
Well, Ruben, thank you so much for joining today's session and welcome. Next, we have Max Müller from Enspired today. So Max, how are you doing today?
I'm doing fine. Thank you, Cristina. Hello, everyone. Nice to meet you all. I'm Max. I'm from Enspired. I'm from the sales team at Enspired. I'm located here in Berlin. I've been like 12 years now in the renewable energy sector, for 1 year now in the BESS sector, which I think is the best sector as well. And yeah, Enspired is an Austrian company. It's an optimizer for batteries. We are offering this trading as a service, and yeah, I'm looking forward to the webinar.
Likewise, Max, thank you for being here today. Next up, we have someone with a very beautiful name, may I say. Cristina, good morning to you as well.
Good morning, Cristina. From Cristina to Cristina.
Exactly.
Good morning, everyone. Yeah, this is Cristina Corchero. I'm from Bamboo Energy. I'm the technical one, so I'm the CTO. I've been involved, I won't say more than 15 years on optimizing energy systems, obviously within them batteries. So very glad to be here to share some of these insights on how to control them optimally.
Well, thank you, Cristina. We're super happy to have you here as well. And last, we have the pleasure to introduce Juan Galiardo Sosa from the Entrix team. Good morning to you, Juan.
Good morning, Cristina. Thanks a lot, Renat, for the invitation. It's a pleasure to be here. I'm the regional manager for Entrix in Iberia. Entrix is as well an algorithmic optimizer for flexible energy systems, that's standalone batteries and co-located assets. And prior to joining Entrix, I've been developing my career in the sort of startup and scale-up space, working in technology companies for the last 15 years. I was the general manager for Uber, the mobility platform in Spain, and joined the Entrix project recently. And it's a pleasure to be here.
Awesome, Juan. Well, thank you so much as well for joining us today. So we're going to move on to the presentations. We're going to start with Ruben. As you can see, we have a full house today. Amazing experts. We're going to know a lot about monetizing BESS and the different revenue stacks. So we're going to start with Ruben from Maxxen. As I said, Ruben, whenever you're ready, you can start sharing your slides. So I think this presentation, we're going to get to know a little bit more about the model as a service and the improvements it makes when implementing it. So Ruben, I think you're all set. You're ready to go.
Thank you. Thank you very much, Cristina. Can you see my screen?
Perfect.
I believe so. Thank you. Thank you very much. Good morning, everyone. Once again, pleasure being in this fantastic panel with fantastic colleagues here nearby. I think we are complementing each other very much on what we say is the BESS revolution. I say the BESS revolution, it was yesterday because there is a lot going on today and tomorrow. And we will try to give a little bit of a brief of what is it actually meant to get this project funded and optimized. So just starting with a little bit of background, where we are today. So there is this beautiful report from McKinsey, the hard stuff, where they analyze the entire value chain of the different industries related to the energy transition. And they stated that just 10% is done. On power generation, we are a little bit better. Almost 50% is already done. In fact, overall worldwide, it is 42%. We still need to do the other half. Now, there is a lot to do still on the power generation side. And I love showing this graph from Ember that they popped up 1 month ago, where we can see how solar, for the first time, has already overtaken any other source of energy globally. This is all fantastic. Solar, wind, and other renewables, but they all need flexibility in the system because, as we know, they are all very intermittent sources of energy. So yes, we need a storage, and we need a lot of storage. Just to put things in context, today, more or less 150 gigawatts of energy storage of different types, but you can imagine most of it is actually energy storage from lithium-ion batteries today, is installed worldwide. But look at what we still have to do to make the full transition. According to McKinsey, we still have to multiply this by a factor of 20. And this is extremely good news because as things are growing, you can actually see here also what is the evolution of energy storage globally. There is a level of growth which is in the 3-digit. We had 69 gigawatts installed last year, a little bit more than 2 hours, and prices are plummeting. There is obviously a moment when things are going to be flattening out, and that's already happening slightly, but you can still a downwards trend happening. So yes, there is a BESS revolution, and yes, we do such beautiful things, like you can see in the picture, but they all need to be financed. And for that, they need to be bankable. What does it mean having a bankable project in BESS? It all starts with the product, of course. You need to have someone who has integrated the right cell. It has to be someone preferably owning its own integration factory, with a factory which is certified, with products which are actually obviously complying with all the different certificates. In Europe, clearly also complying with the European battery passport that we are all very much aware of. Software, let's not forget it. Let's get all this data hosted in Europe, not just having a black box. If your vendor is insurable, that means that vendor might be around for the long term. At least the insurance company is taking that risk. And of course, if it is not the case, make sure there is an insurance behind to back that up. It continues with performance guarantees. That battery needs to have a guarantee on capacity, on round trip efficiency, on availability. And ideally, you would want your vendor to have a long-term service agreement in place and even being part of the cap table of the project so that you have full alignment of incentives between sponsor and vendor. And overarching all this, you need to have a guarantee on the offtake. And there are very sophisticated ways of doing this. And we have 3 fantastic panelists today to talk about that, how to optimize that offtake, because it's the key to unlocking eventually money for the financing of the projects. Just a view on Europe. This is what Bloomberg is forecasting in terms of BESS installations annually. Green is energy shifting. So as you can see, most of the use case of batteries is going to be related to arbitrage, capacity, or co-location. So you can actually hedge those solar assets that otherwise they get paid zero at midday hours. And this is the expected cumulative cap we're going to have in Europe. And according to Bloomberg, 500 gigawatt hours will be cumulative installed in Europe. This is actually tremendous. In my opinion, we believe for utility scale, the number might be actually 200, which is still a lot. And that it means a lot of projects. In fact, we have estimated around 5,000 different BESS projects across whole Europe. And 50%, if not more, of those projects are mid-size. Yes, less capacity, but the majority of the projects are actually small. And those are the ones tricky to finance. In fact, also the vendor has almost 80-90% responsibility on the CapEx cost of a battery standalone project, the rest being balance of systems. So you have a project which might be not too big, but 80-90% of its CapEx is related to vendors like us. So how are you going to be financing those things? Well, project finance is king. Still, project finance is the most established way of financing infrastructure projects. Plenty of institutional investors are there. This is probably the lowest cost of capital that you can actually raise in order to fund these infrastructure projects. But these are typically large ticket projects. Remember, more than half of the projects in Europe are going to be mid-size or small. Those are typically small to have some attraction from institutional lenders and maybe too big for the sponsors to fund on pure equity. Also, with project finance, clearly you need a due diligence, which normally takes time, takes cost, as you very much are aware of. And this is also not such a scalable model whereby everything needs to be repeated every time for every new project. Therefore, might be difficult for mid-sized projects to finance with project finance. Slow development means there are opportunities on the table. Our colleagues from the optimizing side will actually probably tell us the first come, first serve, more money you actually get out of these assets. So you are interested in financing as fast as possible. So being slow is not actually a good thing. There is an alternative to these things, which is vendor finance, battery as a service, lease, the vendor actually providing the finance on the project. Remember, 80-90% of the CapEx might actually come from the vendor. So why not actually getting the vendor financing that? Of course, there is still a little bit of balance of systems. That cost needs to be financed with equity from the sponsor, most likely. But there is a big majority of the CapEx, which is contributed by the BESS vendor, and battery as a service coming from the vendor makes a lot of sense. This is the comparison table, as you can see, from 2 different ways of funding: the mainstream project finance and an alternative vendor finance. These are both debt vehicles. They don't dilute your equity. Both actually require as security the pledge of the project. If customer doesn't pay, well, maybe there is a way to just pledge the project and get some payment out of the assets in it. The legal structure, however, is different. Project finance is financing the SPV. Assets belong to the SPV, whereas vendor finance is selling the right to use that. It's not really giving you the ownership on the product. Project finance typically funds up to 50, 75%. I see nowadays in Germany projects with 65% when you have secured 50% of the offtake, but clearly it's not going to be financing you 100%. In vendor finance side, you could up to assume 100% of the capex in behind the meter projects. And in front of the meter projects, you may fund just the scope of work of the vendor, which is still 80, 90%, a bigger chunk of the project in any case. The minimum amount required by project finance is significant, which is a threshold lower in vendor finance. Tenors could be actually long-term in both cases. Due diligence, another very important key factor, very thorough, very analytical for project finance versus maybe a lighter due diligence required from the vendor. Alignment of incentives. If you have a vendor and a sponsor which are actually not having the same interest, that is actually not too bad, but not necessarily the best option. With vendor finance, obviously you have those alignment of incentives, because if the battery doesn't work, the SPV will not pay the vendor. So it better work, right? Scalability, again, as we were saying, it is a little bit of a hurdle for project finance because you need to have a very thorough analysis, and that takes time. All this to say that, of course, vendor finance has its own space and it actually has its virtues, but it's obviously more expensive. It's obviously a different risk level with a different expectation on the reward from the project. But if your project has an IRR in the double digit, that's still a very good proposition, especially if your project is not too big. Project finance will still be the king, will actually fund most of these projects, especially if they are large, because that's definitely the cheapest source of capital that you can obtain. But there is also an opportunity for small developers and small sponsors with projects up to certain size, say 50 megawatt hours, which might have difficulties finding funding from institutional lenders and may be supported by vendors like us when deploying those projects. So yes, batteries are actually yesterday, they are being deployed today and exponentially compounded with mechanisms like this and optimizing in the future. Good moment to be in. Welcome everyone to join the BESS revolution. Thank you, Cristina.
All right.
Back to you.
Thank you, Ruben. Definitely. I think that there's no other way better than saying it's the best revolution. So thank you for your intervention and taking us through a little bit how things are currently, and especially project finance that are mainly bankability, that's mainly a headache for very much of the people in the industry. So moving on, we have Max from Enspired. Max, whenever you're ready, you can start sharing your screen. Max is going to take us all the way to Germany and give us some lessons learned. I think there's an algorithm there that you're going to showcase us. So Max, whenever you're ready, I see perfectly your screen.
Perfect.
It's all yours.
Wonderful. Thank you, Cristina. And yeah, hello again. It's me, Max, from Enspired. So I will speak about the best practices we have in Germany. And yeah, let's just dive into it. I already mentioned a few things about Enspired, just mentioning here that we are working also in Germany. So that is where our knowledge is based, and some of the details I will show with you. But let's jump into the topic of money. I think, Ruben, you gave a great intro into how to set up the BESS, how to finance it. Now it's how you can make money with it. And as we are talking about the as a service aspect of the battery, I think trading as a service is the gold standard right now when talking about batteries. And in Germany, I think the standard is also having this algorithmic trading and being able to participate in all the different markets that are attractive for you and that are good for the battery. So speaking mainly about the capacity markets like FCR, AFR capacity, but also AFR energy, and the wholesales markets like day ahead or intraday. And in the end, your optimizer then is using the battery, depending on the prices, depending on how the market evolves. And the nice thing of a battery is that it's very flexible. So you can slice it up into different parts and then use one part, for example, for FCR, another part for AFR, the rest for the wholesales markets. So it's really, I think, a big asset of the optimizers that you have in the market, that they really are able to make most of the battery using all the different markets. Those markets might differ a bit from country to country, but those are the markets that we see now in Germany and also in other countries as the prevailing markets. Now, talking about those possibilities of revenues, you're probably wondering how those different markets or what's the importance of those different markets in the revenue distribution. So I brought some numbers to you, and I also brought some football in to get your attention. So I have here some numbers for a 2-hour maximum 2 cycles battery standalone in Germany. And let's have a look at the revenue distribution over the last years. And we have some Champions League winners for 23. We have Manchester City, Real Madrid in 24, and in 25, it's Paris Saint-Germain. So let's see how those different years developed. So in 23, you can see a very, interesting year. So this mint green here that you can see, this is the wholesales and AFR energy revenue. And you can see most of the year, those markets were responsible for most of the revenues. So this mint green bar has been up to 60, 70, or 80% in 23. But in June and July, very interesting, very particular months, where we have a lot of AFR capacity. So, and nearly nothing of FCR. So you can see it can change a lot over the year. And you can also see it can change abruptly during the year. So AFR capacity changing from 10% in May up to 60% of revenue percentage in June. Let's have a look at 24 when Real Madrid won against Dortmund. And you can see it was not only a good year for Real Madrid, it was also a good year for wholesales and AFR energy. So when focusing again on this mint green bar, you can see nearly every month, or most of the month, it was up to 60%, and sometimes even 70% of the revenues. So the markets have been very volatile back then. And the prices for ancillary services like FCR and AFR capacity have been much lower. So AFR capacity, those purple bars, have been up to 20%, round about 20%, and FCR also with a very low numbers compared to wholesales and AFR energy. Now, what would you expect for this year, for 25? You might expect that markets continue saturating, wholesales is still prevailing. But if we look at 25, you can see that especially in the last months, AFR capacity has been very strong. So getting up to 50% of the revenues for this specific case. And I think it's two tendencies we can see here. On the one hand, FCR is in Germany really getting lower and lower revenues. It might become obsolete at one moment. But on the other hand, the AFR market is very strong. The AFR capacity market, but also the AFR energy market, together with wholesales between 40 and 50% in this year. But I think the bottom line for you is to see that those markets really are able to change quickly, and it's important to be very flexible in this regard. Another topic I would just give you as food for thought is the importance of warranty conditions. So if you have two batteries that are the same, that are technically the same, but they have different warranty conditions, they might have very different revenues over the years because of the warranty conditions. So you can see here resting period. So one resting period of 1 hour after each full cycle can make up for a difference of up to 12% in the revenues compared to no resting period. So I think this is a very big topic. Many suppliers insist on resting periods, and I think they have also good arguments, but it's just something you have to talk about, you have to discuss together. Also the cycles, I think it's self-explaining. If you have more cycles, it's possible to get more revenues, but you have higher degradation. You have to calculate how does it fit into the business case. Similar SOC range, I think that's also self-explanatory. If you have more available capacity, you can make more money with it. And finally, RTE, we have here from 89% to 90%, really doesn't bring a lot of higher revenues. But if you calculate the business case, also 0.37% might make a difference for you. And just putting it all together, looking at one battery with those parameters here on the left with 1.8 cycles, we might end up at 260,000 euros per megawatt per year for this battery in Germany. If you're able to improve those values and to get higher revenues when speaking to your supplier, and also including your optimizer maybe, then you're able to increase the revenues by more than 11%. So it's really worth looking at those topics, discussing it with your partners, with your optimizer, with your supplier, and then see how you can improve the business case. And it's really, I mean, in this example, it's 30,000 euros per megawatt per year. And it's something that can really sum up quickly over the years. In this example, it's 15 million euros over 10 years. So quite a lot. So yeah, I think this is just food for thought for you to take away with you for your next discussions with your hardware suppliers, with your optimizer. What are the markets you would like to be in? What are the performance warranties you would like to focus on? And yeah, that's it from my side. Just some ideas. Looking forward to the discussion. And thank you. Thank you for your attention.
Well, thank you so much, Max. Next on, we have Cristina. Cristina, whenever you're ready, you can share your slides. Just a quick reminder that if you have any questions, because I'm seeing some of them being posted on the chat, you have the Q&A box available so we don't lose track of them. I'm seeing that Ruben is already working on the questions. So thank you for letting them post there so the panelists can see them. Okay, Cristina. So I know that we're going to talk a little bit about optimization behind the meter. So I see your presentation is ready and the floor is all yours.
So thank you so much. Yeah, we are moving to behind the meter. So let's see what happens. Just a brief situation on who is Bamboo Energy, just for the ones that don't know us. We are a Spanish company based in Barcelona. We have commercialized an AI-powered flexibility monetization platform that I will show you why we are here also talking about BESS. We work with more than 25 utilities and 6 European countries, and what is going to BESS, we have more than 10 OEMs integrated already in the platform and managing BESS behind the meter from smallest ones in our houses to quite big ones in factories around Europe. So let's see why those behind the meters batteries are also interesting. I want to bring here some questions or some comments that people has told me on the last weeks regarding what we are discussing. So, for instance, we want to implement battery as a service model, but the numbers won't work. That was a utility last week. Or behind the meter needs more changes on the regulation to be profitable. Or the idea that models that we will show today are too complex for the consumers, and they don't need that. They need something easy. And the one that I love the best is that the battery is already smart, so there's nothing else needed. But then they said, but the numbers doesn't work, so it's kind of okay. let's try to put some light here. And I want to point why behind the meter is different. So why we have to somehow take care of that. If we think on a standalone battery, and AI has helped me to picture that two options. If we have those standalone batteries, what we had is a battery that at the end we have to monetize, and Max has already explained it super well. So we look at market conditions and we optimize it. But when we have a battery that is not alone, so is with some PV, with some factories, with some consumption, with a building, with whatever is around, we have to take care of a lot of other things. So it's not only market conditions, that also for sure, but we need local generation. Typically, there's no forecast for local generation, local consumption, flexible consumptions, if any, and user constraints. And not only that, where we are planning the project for these batteries, and we move to the standalone, we need to know about grid access. We need to know how much money we have and how to get it, as Ruben was explaining. But when we move to the not alone batteries, there are other things that we have to take into account: consumption, PV surplus, is there any or not? So we need to optimally size those batteries to really build up a business model that is convenient. So that's why we have to take care of this behind the meter in a different way. But it's not only because of that, and it's not only because of the battery itself, it's the whole energy system who is asking for that. We have an energy system that was, let's say, gathering flexibility, so gathering this equilibrium to the system from PVs, from big batteries. But the system needs more. So we are seeing in countries like or Netherlands or Belgium or others, that they are, Germany too, that they are struggling really with the real-time management of the system. So the system is getting complex. The system is getting faster. So we are not anymore 24 hours ahead. We are now 30 seconds ahead, 1 minute ahead. And we need to face that from the distributed assets, from these batteries that are distributed among our consumption nodes, among the buildings, the factories, and so on. And they have a role on our systems, and they have a potential on our systems to really monetize and improve these investments here. So that's the present, not the future. And I will show you some examples of this present. But let me move to the what we need for that. So what is this optimization? What is this AI algorithms that are being put in place by Bamboo and other partners in Europe? The idea, as I mentioned, we need focus on what is happening locally, the demand, but also the generation. It's not a huge park generating solar, it's a small PV on a rooftop. So we need to know how much generation is there. Then we need to know which flexibility we have, how we can handle this battery, how we can move this consumption to really optimize the site. Then building up this optimal battery energy management system strategy so that we really extract all the value that is there, always taking into account the constraints and the hardware itself for sure. And then we need to real-time control it. It's not anymore about saying, okay, tomorrow that's what would happen. I plan it and that's it. It's real-time. It's every seconds sending a signal to this battery to charge and discharge, depending on the conditions. And I will start with, I would say, the worst case, which is Spain right now, but it's my country. So I want to really show that there is use cases in Spain. And so let me do that. I will bring two use cases here. And let's see if the BESS is smart enough, but let's also see if there is a business case here. So that's an industry. That's an industry that they have already installed this battery. But this is the previous scenario. So this is the scenario without the battery. You see here, this red line is the power contracted. So they have different power contracted depending on the hour of the day. And they have issues. If you see around 7 in the afternoon, they have issues with the power contracted. So they were consuming more than that were allowed. The dot black curve is the price. If we put the battery, what we see is that we can avoid this excess of consumption. So we can do this peak shaving, as we were pointing out, but we can also do some arbitrage. So we can move some energy from 1 hour to another. That might seem obvious, that you can think, yeah, that's what the battery does, but that changes every day. So that's a day of August, but if we find a day of March, that will change totally, not only the behavior of the consumer, but also the prices. So that should be dynamically done every day, every hour, so that that's really optimized. But there is something to do here, even in Spain. And another case also in Spain, which is even more interesting. In this case, we have the peak shaving, also energy arbitrage, maximizing self-consumption, but also this consumer is able to sell energy to the grid. So they can inject the energy, which the other cannot. The other has this zero injection situation. That's what we had. So we had some excess or surplus of PV at noon, at when lunchtime, which also, obvious, coincides with the zero prices scenario in Spain. So we have the perfect picture. We have surplus, we have zero prices, so it's everything amazing. Then we put a battery here. And there's something interesting. Obviously, we consume the excess of solar with the battery. That's nothing new. But what we also do is to even consume more than the surplus of PV that we have. We charge the battery from the grid because we have zero prices. So we are able to do that. So we will have energy in our battery that is cheaper than the one that we will pay later on. And as in this case, they can sell to the grid, what you do is to inject at the peak hour of prices for sure to extract the maximum revenue of your storage system. That's behind the meter, and that's a use case that you can do in Spain. Obviously, there are different scenarios depending, as I mentioned, PV surplus, tariffs, PV power contracted, and so on. But we have seen examples in Spain again with up to an increase of 42% of self-consumption ratio with a storage system and a reduction of 35% of the energy cost, including this storage system on these behind-the-meter sites. So moving to Europe, obviously, numbers are always greater, but we are moving to that. So Spain is coming to here. But this is just bringing two examples similar to the ones that Max were coming from the meter, but with behind the meter. So those sites are within an industrial site, those batteries, and they are participating in these mechanisms that were mentioned before. So they are participating in MFRR, in capacity markets, and they are bringing value to the system, and you can see to the users. So reduction of 11% of energy cost, or 255 kilo euros megawatt year, which is quite similar to Max was showing for Germany. In this case is for Belgium, but it's a similar use case. Here is a matter of value stacking. So being able to manage the battery to answer all these different mechanisms, depending on which is the best one for you at this specific moment. So that were the questions that the people told me. And the answers was, battery as a service is profitable if you establish the adequate management system. So it's a matter of optimizing this battery. Behind the meter has opportunities today if you know how to capture them. So it's not that they are not opportunities there. And the return of investment is being every day better. The consumer needs something that is easy. I am absolutely agree with that, but should be value to them. So it's a matter of making things easy for the battery owner. And I'm so sorry, but the batteries are not smart enough yet. So they need, well, people ask me, Max and Juan, to improve their behavior, and I think all win from that. So that's it. Thank you so much.
Thank you, Cristina. Thank you so much for your presentation. Very, very helpful, and it's amazing to see how the markets are responding. So next we have Juan Galiardo. Juan, whenever you're ready, you can share your presentation with us. In the meantime, I'm seeing that our speakers are doing an excellent job responding to all the questions. So if you have any, now's the time. Okay, and I see that your slides are already visible. We're going to talk a little bit more in depth about Spain and how projects can be backable. So the floor is yours.
Thanks a lot, Cristina. Thanks, everyone, for the engagement and the questions. Honestly, it's a privilege to be here with such a panel of experts on the topic. Let's see how much we can add to what has already been said. From our side, we'll try to focus a bit more on the utility scale side of things and focusing on Spain, which is our latest bet for Entrix, as I'll mention in a second. So jumping straight into it, I won't spend too much time talking about Entrix. We are a algorithmic optimizer for flexible assets, utility scale, that's standalone batteries as well as co-located batteries. We were founded in Germany in 2021. We're a 100 people team, of which around 2/3 is software developers, data science, product team. So obviously a strong focus on actually building this algorithm that can bring, to Cristina's point, the intelligence to the flexibility systems. And today we have around 2.3 gigawatts of flexible assets under management, and working with clients like large utilities like Total Energy, international IPPs like Aquila, as well as large infrastructure funds like MEAC in Germany. Definitely the algorithmic engine is a necessary condition, and we'll talk a bit more about it, but this is not enough. It's not a sufficient condition. We're also a service company. We try and sort of work hand in hand with our clients from early on in the journey, helping them navigate strategic decisions around asset configuration and so forth. We have a large operational team that makes sure that everything is running smoothly. And we'll talk also a bit more around the commercial models, where we partner with offtake partners to help our clients find the best fit, the best balance of guaranteed revenues for the project that they're looking for. To share some numbers around how much algorithmic trading matters, and building on, I think, everything that Max has already mentioned, the idea of having an automated system that is multi-market, that can indeed in real time decide and trade off how to, where to allocate capacity to wholesale arbitrage, the different balancing services, being able to do virtual cycling, etc., matters a lot. And we see that when we compare our back testing with Kronos data, this is data for Germany, the upside is very significant. Also, definitely, this is it's not a small increment. This is an absolute must when managing utility scale flexible systems. So I'm not going to go too much into it because I think most of it has been said. And as I mentioned before, we started in Germany, have been operating there for a while now. We recently expanded into Poland, leveraging a strong partnership with Greenvolt, and in Italy, coinciding with the Maxxen service, the Maxxen auctions, and Spain is our next big bet. Iberia is our next big bet, and that's what I'll be talking a bit more about today. Probably this is not news for those of you that have been following the Spanish market, but capture prices for solar PV has been steadily declining as solar capacity has been ramping up. The figures vary slightly, but we've probably already crossed or are about to cross the 50% mark in Spain. And unfortunately, we haven't seen rock bottom yet, likely as additional solar capacity hits the market with all the projects that were already sort of in permitting phase and so forth. We likely see figures potentially even below 40% in 2027. So that's definitely obviously a huge challenge. Negative prices, curtailment, all of that has contributed to putting a lot of pressure on standalone renewable projects in the last couple of years. No surprises when we participated in Foro Solar, the biggest solar event in Spain, in Madrid last week. The absolute and doubtful protagonist of the event was storage. No, it was definitely the main lever to improve profitability of renewable projects and to improve access to financing in the sector. No? And that's what we're going to be talking a bit more about today. No? I think to put some numbers and to give some context, definitely the situation I just mentioned of renewables has contributed to this increase in BESS. The blackout that we had in April, I think, was a very tangible reminder of the importance of having significant sort of storage capacity to the Spanish market, and all of that with the overarching objective of the Spanish government, as you know, with the latest PNIEC, of reaching 22.5 gigawatts of storage. That's obviously not only BESS, it includes pumped hydro and others, but definitely a very ambitious target that we're also working towards. Since then, a number of measures have been taken to support the development of the sector in Spain, direct capex subsidies with the further subsidies that are that were recently launched, an increase, and we can talk a bit more about it, increased flexibility in the permitting processes that you need to go through to execute a battery project, the declaration of utility of batteries, reducing for collocated projects the maximum time that the government had to respond to some of these procedures, have all started contributing, although definitely permitting is still a major bottleneck, and we can talk about it. And last but not least, the upcoming capacity market. I think we've been talking about the arrival of the capacity market for a year or even more now, and it seems that it never arrives, but I think we're cautiously optimistic that in the first half of next year, this will finally be launched. The process is well advanced, has cleared a number of stages, both in Spain and in Europe. So we're confident that this will happen soon. All of that has contributed to what can only be described as a significant wave of BESS projects that are going to hit the Spanish market very soon. And it's worth pointing out that the starting point is that we almost have no utility scale operational BESS in Spain today. I think 30 megawatts is currently the latest data point. But at the same time, we have already 20 gigawatts, according to Red Eléctrica, of projects with a grid connection, of which at least we believe 5 gigawatts have initiated the DIA, the environmental assessment, which already gives you an indication that this is a project that was not speculative, that had, has more chances of actually coming through. No? And in Q3 alone, this year, we've seen 3.5 gigawatts adding to that pool of projects that have initiated environmental assessment. That's a 5-fold increase versus Q2. So definitely we're at that sort of tipping point where likely we're going to see massive increases over the next quarters, as well as 300 megawatts of projects already with construction permits. So definitely all in all contributing to a very significant pipeline on BESS. No? Now, how does that look for the Spanish market? I think Max did a great job outlining for the German case how the revenue stack looks roughly. So I'm not going to spend too much time talking about the different use cases for a battery. I think Cristina, I think also covered that. No, wholesale, the different balancing services. The main takeaway I wanted to leave you with here is that in the case of Spain, and this is an illustrative revenue stack for a standalone battery, in the short term, balancing services, in particular the secondary reserve, the AFRR, offer very attractive returns. And in the short term, we expect that to be one of the dominant components for the revenue stack of standalone batteries. Ultimately, the question is obviously complemented by, as you can see on the left, wholesale markets, the upcoming capacity market, as well as very interesting a very interesting revenue stream around technical restrictions. This is an incredibly location-specific revenue stack, which is also one of the important decisions that need to be made when not considering a BESS project. This has been an incredibly expensive line item for Red Eléctrica this year. So we do expect that to likely have to be sort of structured slightly differently, unless this is going to end up increasing end consumer cost of energy sort of pretty materially over time. So we don't think that this is going to stay at these levels, but this will definitely be a very interesting component. And ultimately, the question is how quickly will these ancillary services, balancing services saturate? Now, as you can see on the right-hand side, market sizes are much, much lower in absolute terms. So as more and more assets come in, they will cannibalize revenues. And that is one of the things that is obviously generating uncertainty. We don't have too many. There's a lot of interest. There's a strong fundamentals, a lot of interest in the pipeline, but still questions to be answered around how that revenue stack will exactly look like, how the ancillary services will saturate or how quickly they'll saturate. So in that context, obviously, access to financing is one of the key questions that many people are faced with. I don't want to spend too much time because I also want to make sure that we open this up for questions soon. Just maybe a quick reminder that on top of the fully merchant model that obviously might make financing would be very lucrative, but entails more operational risk, might make financing more complicated, and hence increase cost of capital. And on the other extreme, the option of a full tolling, which is what many traditional banks are asking for, not full tolling with an investment grade. But in the short term, you're likely going to leave a lot of money on the table. We see a number of intermediate options that we think are interesting, in particular the floor option with a strong counterpart, where incentives with the counterpart are aligned, and where you can hedge a significant part of your revenues to optimize financing, but at the same time be able to tap on the short-term attractiveness that in particular balancing services in Spain can offer. So yeah, that's all I wanted to share with you today on this, I think, very special moment that the Spanish market is going through, and how optimizers like Entrix can help you in that journey.
Perfect, Juan. Well, thank you so much. Now let's move on to the Q&A. Most of the questions have already been answered by writing. These speakers have written the responses, but maybe we can go back to a couple of them just in case someone is interested to have a discussion. We do have one question for Juan that has not been answered. So this was for you. However, if any of the other speakers would like to add anything after Juan's intervention, just raise your hand or let me know at the end. So Juan, overall, how do you expect the recent changes of the CNMC made an impact on BESS, even though they are temporary at this point?
There's so many ongoing changes with the CNMC. Can you elaborate on which ones are you referring to make sure that I'm addressing the right question?
Okay,
I don't know if we can ask a follow-up.
Anna, if you can do a follow-up and just talk a little bit, can you be a little bit more specific for the question for Juan?
Maybe we can move to another one and I can pick it up as soon as I want to make sure that I'm answering the right.
Sure, definitely. So there was a question that Ismahan asked and wanted to make sure he read, which was, can optimization coexist with site resiliency needs? I know that Cristina replied both times, yes, they can. Just so you know, it's in the written part of the Q&A. Cristina, I don't know if you want to answer it live as well, just in case.
Yeah, sure. So that's a classical use case. For instance, we are seeing it a lot on the data centers. So batteries are for resilience. So batteries are there for other purposes, but typically there's some room there to optimize. So the idea is to combine both, and that's absolutely possible. And also we were pointing out that for people that is thinking about this RAT or other capacity markets is the same. It's not just having the battery for that, and you cannot use it for anything else. We are combining this kind of capacity or more static things with dynamic optimization, so that improves the business model. Yeah, for sure.
Perfect. Well, thank you. Thank you, Cristina. So I see that Anna has already specified a bit more. So she says, well, this is a little bit technical. Juan, not sure if you're.
I think, yeah, I think we're
Okay.
probably referring to the ramps that were recently introduced to improve voltage control. As you know, since the blackout, and Anna, correct me if I'm wrong, since the blackout, Red Electric has been extremely worried about the voltage anomalies in the system. And one of the recent decisions that were made was introducing a 50-minute ramps affecting the ability of renewable projects to participate in ancillary services. I do think I understand that this is the question you're referring to. This has obviously hit the renewable sector hard at a time where capture prices are low and they're already facing a lot of pressure. Our understanding is that these measures are temporary and that there are better ways of establishing voltage control systems. As a matter of fact, we think in next year, potentially a sort of more structured voltage control market will be launched, which will allow to address the challenges that I was outlining without compromising the ability of renewable assets to participate in ancillary services in this way. No? So obviously, it's our opinion. Time will tell, but we don't see this. We don't see them as structural changes, but more temporary changes, given the sort of the pressure that Red Electric is under around voltage control. Hopefully that answers your question.
Okay, well, thank you, Juan. She is confirmed that those were the ones that she was referring to. So perfect. So next question. I think Cristina, this one's this one's for you. You just marked it. So is there any app or calculator to do the sizing feasibility study of BESS for behind the meter applications?
Well, yes, I guess yes. At least at Babu we have one. Yeah. So I'm pretty sure that there are others, but yeah, for instance, at Babu we have one, and as I mentioned, sizing in behind the meter I think is a key aspect for assuring the sustainable business model before deciding the battery to install. But yeah, there are, and yeah, we can chat whenever, I don't know, he or she wants for discussing that for sure.
Perfect. There was Juan, you wanted to answer a question and I just lost it. My apologies.
Yeah, I think there was a question on whether batteries can coexist
With
with
the PPA.
PPAs. They definitely can. Obviously, the more commitment there is on, assuming in a collocated project, the more commitment the battery has on a PPA, the less room there is to optimize the flexibility component of the asset overall, and hence less upside overall. But they can definitely coexist. And as a matter of fact, what we see is that PPAs for collocated projects improve very significantly in price compared to standalone renewables. In some cases, increases, depending on the country, between 50% and doubling in value, no? Because of being able to shape the curve through the renewable asset much more. No? So they can definitely coexist, and that improvement is reflected in the price. Sorry, Max, I don't know if you wanted to take act.
No,
Okay.
no, just that. I think you already mentioned all the important things. But just to add, it's possible. I think the magic is data exchange. So it's always important to know what the PPA asset is doing, the PV or the wind farm is doing, so you can optimize the battery accordingly. And best case, of course, would be to optimize both with the same hands. So then you can really optimize the whole system, and you have the highest revenues.
Okay, perfect. All right, last question, Christine. I'm saying you write it down so you can just say it out loud, and we can finish with the
Okay.
webinar and with the questions. So, do you allocate energy bands for specific markets, or do you keep it all open for all markets?
It depends on use case and user preferences and obviously site constraints. So that can be one option. So there is something allocated for specific use that the user needs, or it's all dynamic and you choose at every time step which is the one that is more profitable. So it gets adapted to the end user or battery owner for sure.
Okay. Perfect. Well, Max, I'm seeing you writing it down. Do you want to just say it as that? This is the last question, I promise. We can finish. But you guys did such a good job with the questions. So Max, this one's for you. If anyone else
No,
wants to jump in, go ahead. You're gonna
I
say.
was just saying to Joaquin, like in my own biased view, of course, as an optimizer, I think there's still a business case for batteries in the future. I think we will always need batteries. We are in the course of an energy transition, so batteries will be needed in the future. The markets might be different. There might be no FCR anymore in the future, but other markets. So I'm very positive that there will be a positive business case.
Okay, perfect. Well, thank you, Max. I'd like to ask this question to all of our speakers to finish up. So, Ruben, is there still a positive business case for batteries in 2035?
Yes, I wanted to add there is still 50% of power generation to transform to renewables. So there is a lot still to be done on the supply side. There will be a lot of intermittency still added to the system, and we still have to catch up with the intermittency of the assets today. So yes, there is definitely a lot of space for flexibility sources like batteries to be added in the energy system. I don't know in what shape, like Max says, but there will definitely be a business case moving forward, I believe.
Perfect. Okay, Juan, do you agree or disagree? Would you like to add something else?
No, I think I fully agree. I think there's going to be not only a need for batteries, but also a need for more distributed batteries. I think combining utility scale batteries with sort of smaller batteries, decentralized across residential, commercial, industrial, etc., is going to give overall the grid much more stability. So that's what I think we should all be working towards. And looking at this panel, I think it's a great testament to that effort.
Perfect. Okay, and last but certainly not least, Cristina, do you see a business case for 2035 for the BESS industry?
I'm sure I will only compliment on the distributed things, but I'm pretty sure that there will be a much better use case than today for sure, and business than today on 2035 for batteries. I'm absolutely sure on that. Yeah, there are flexibility, there are deflexibility, so they will be the complement to any other situation, and the one that will help us to adapt to the changes on the system and the markets. So I'm pretty sure that there will be for sure. Yeah.
Perfect. All right. Well, thank you so much. I see that there's a question lingering there. We will send it to our speakers just in case they want to respond later on. But I wanted to thank you, everyone. Our time's up, unfortunately, for attending this webinar. It was a real pleasure having you all. Thank you for the questions. Thank you for the attendance, and our speakers. Thank you so much for opening our eyes, giving us a lot of context, a lot to think about. And seeing how these things are evolving, because there's critical times, as Ruben said, it's the BESS revolution, and what better time than now to start acting. So thank you everyone so much for being here to see. We hope to see you all, of course, at our event in March, but before that we have tons of webinars prepared, so stay tuned, and we wish you all a great day. Thank you so much.